Hey, what's up guys? John here. The auto loan crisis is now getting a lot worse.
The average monthly payment for a new vehicle is now more than $700 a month and more than $550 a month for a used one.
Tesla just announced that they are cutting prices again. You have Ford, Chevy, you have all the big brands looking at the writing on the wall, and they're going to start cutting prices in a very big way.
If you're looking for a new car under $20,000, there is only one choice. It's the Mitsubishi Mirage.
The average car price right now is about $48,000. I never thought in my lifetime I would see a starting price of a new car be at $48,000.
So if you are thinking about buying a car, maybe you just bought a car, maybe you have an auto loan, pay attention to what's happening here, because I think this is going to restructure America as we know it. Because the average auto loan balance in America is 125% loan to value, 0% down, rolling everything into an auto loan. And when you start seeing these prices come down, people are going to look at how much they have left on their car payment versus how much that car is trading for today. You're going to see a lot of Americans, probably millions of Americans, giving the keys back to the bank, pushing more distress on this market. Now I'm telling you, this is going to be one of the biggest bubbles in U.S. history. And the reason for this is people without a car, they can't get to work. Well, if they can't get to work, they can't make money. They can't pay rent. They can't pay student loans. They can't pay credit card debt. Everything starts with the car. When you take away the car, a lot goes with it. And I'm going to break it down clearly as to what's going to happen next. So if you're thinking about buying a car, there's going to be a lot of opportunity coming very soon. I'm going to break it down clearly. Please hit the like button. When you hit the like button, YouTube will share this video to educate more people about what's really going on. And if you're thinking about maybe buying a car, but you have bad credit, don't let that get in the way of an incredible opportunity. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, you have a problem on your credit report holding your score down, do not let it sit there. In many cases, one negative item can sit in your report 7 years. One late payment, 7 years, can drop your score upwards of 180 points. It can completely take your life off track just having one or a few negative items on your report. Book a free strategy session below, and we will go over your credit report with you, tell you how long we think it's going to likely take to fix it, what the best plan of action would be, and then you can make a decision on if this is worth pursuing or not. But don't let it just sit there and ignore the problem. Go to greatcreditfast.com, book a call down below. Take a look at this. Delinquencies rise for credit cards and auto loans, and it could get worse. Pay attention to this. So Yahoo News came out today. Prices are about to plummet due to oversupply. Right? The U.S. car market has shifted into a lower gear in only a matter of months. After average car prices hit record highs as recently as last summer, some analysts now predict that oversupply of vehicles will lead to a price war that sends prices plummeting. That is what's going to likely happen. A recent report from UBS estimates that global car production will exceed sales by 6%, leaving in excess of 5 million vehicles that will require price cuts to get sold off the lots. 5 million cars. Tesla, yesterday evening, they're going to cut prices upwards of 20%. 20%. This is hitting the news everywhere right now. You know, Model 3s, right? Model 3 inventory in the U.S. cut by $5,500. Now imagine you bought a car for $40,000 and now that car is $34,000, $33,000. You're going to start asking yourself, what should I do? Should I keep the car? Should I give it back? Should I just make the payments and ignore what prices are trading for now? I mean, I believe this is not going to be the last cut Tesla does. They're going to start really cutting these prices to offload this inventory. Because how many people right now are looking at their financial situation saying, hey, this is a great time to buy a car? Not many people. A lot of people were asking themselves and making those decisions in 2020, in 2021, and 2022. When the money printer was on, interest rates are super low. Everyone felt very wealthy from stimulus payments, PP loans, unemployment benefits. Stocks were going up, crypto was going up, everything was going up. The world was a lot easier. That's when people were making a lot of buying decisions. Now the tide is turning. Well, at the same time, new car interest rates, 9.48%. 9.4%. A couple years ago, might have been 3%, 4%, right? 9.48%. It's a multi-decade record. So rates are continuing to climb. And just for context, let's say you bought a $40,000 car, right? $40,000 car, it's a 60-month loan term. You put nothing down, which is, believe it or not, that's the norm now. It's $839 per month, $839 per month. The average car payment, $733 per month, right? Well, look at this. This came out from Kelley Blue Book. The average used car loan is 125% loan to value. They roll in taxes, tags, dealer fees. Everything goes into the loan. 125% is the average loan to value. And now we're starting to see products 84-month loan terms. 84-month loan terms, 125% auto financing. Now you tell me that's not a bubble, right? 84-month loan terms. So, I mean, look at this. At that same exact time, auto insurance rates skyrocketing nationwide. So 3 days ago, auto insurance rates to go up in New York this month. Well, experts predict higher car insurance rates for Nevada drivers. That was 2 days ago. Well, look at this. NerdWallet, why car insurance rates are going up. Car insurance rates have gone up over 17% in just the past year. 17%. And I think they're going to continue running upwards. I mean, you look at the disasters that are happening in all these different places all throughout America. You start to look at this. Supply shortages, climate, right? This is what's going to happen. We're going to start seeing more and more and more increases on these rates. So you have somebody that, let's say, bought a car, they have a $733 monthly payment, and now they have insurance. Maybe insurance is $200, right? So now they're $933 payment. Then you have gas prices, repair costs. I mean, everything is just getting more and more and more expensive. We're going to start just seeing this stack up. And there's a huge problem that's about to unfold in the next coming couple of weeks that I think is going to set this domino forward. I'm going to break it down in just a second here. So gas prices, all-time highs. I mean, for 2023, $5.59 a gallon, right? $5.59. So we're starting to see gas prices continuing to run rampant. At the same time, they say that the average income in America is $56,940. So basically, $5,000, $4,000 a month is what they're saying the average. I think that's very high. I don't think the average person is making $1,000 a week or $1,200 a week. I think that it's much less. I mean, just for context, 59 million Americans receive welfare. So 19% of the population. So that's not factored in to this figure. So if that was factored in, then the average income would probably be somewhere around $80,000 or $70,000, which seems very, very high. So when we start to really look at this data, we see that the consumer is in a much harder spot than they're letting us on to believe. At the same exact time, lending. This is according to the Federal Reserve.gov. FederalReserve.gov, they are saying that lending is getting greatly contracted. Over the second quarter, significant net shares of banks reported having tightened lending standards, right, for credit cards and other consumer loans, while moderate share reported have done so for auto loans yet. So just wait. We're going to start seeing, when these cars start going back to the lots, we start seeing more and more and more of these repossessions. We start seeing a lot more people handing the keys back. They're going to be very, very careful on who get these auto loans. I think credit is going to be extremely important in getting advantage or taking advantage of some of these deals. So what I think is going to be this huge crisis that's about to unfold is interest rates on student loans and these payments that are already starting. So interest on student loans is already accruing, right? Beginning September, and payments are going to start again in October. So for context, the average payment, $503, is almost like another car payment that you're going to have 17% of the entire adult population now being responsible for, right? 17% of the population is going to start paying for these auto loans, or these student loans rather, next month. So this is going to be a big, big problem. But all that is going to be supported with Jerome Powell saying that inflation is still too high and warns we are prepared to raise rates further. So what does that mean? That means credit card interest rates are going to get a lot more expensive. Auto loans are going to get more expensive. Personal loans, home equity lines of credit, adjustable rate mortgages, everything is going to continue to get more and more and more expensive. And so what is this likely going to do? People are going to start looking at where they're spending their money, and they're going to start cutting out costs. One of the big costs is likely either going to be rent or it's going to be this car payment. I just think we're going to walk into a problem where people are looking at their spending saying, hey, am I spending $1,500 a month? $1,500 a month to drive this basic car? A lot of people are going to say that's crazy. You add the numbers up. $733 for a car payment, $200 a month for gas, call it $933 total. Then you have to add in insurance, probably another $200, right? That's $1,133. Then you have repair costs. You have cost of owning the vehicle. I mean, you're getting pretty close. And 1 in 6 Americans right now has a car payment above $1,000. So you start to look at these numbers. It's a big, big problem, and I think it's going to be a huge opportunity for those looking to buy a new car, those looking to buy a used car, because these dealers, they're going to have to get these cars off the lots. And how many people can go out there right now and say, I'm going to buy a car in 2023. I want to go buy a car in 2024. Not that many people. There's going to be a lot more people saying, I need to sell this car. I need to get rid of this car. And Carl Icahn, the famous billionaire, he said something that I think everyone needs to pay attention to. He said, my job as an investor, sell when everybody wants to buy and buy when everybody wants to sell. And that's what I think is going to happen very, very soon. So if you have a business, you need to get a work truck, you want to get a family vehicle, you want to get, maybe a sports car, maybe you want to get, just an everyday daily driver, whatever it may be, you're going to just start seeing a lot more opportunity here. And I think this opportunity is going to be incredible. So if you want to fix your credit, you want to position yourself so you can get access to the best interest rates to take advantage of some of these incredible investing opportunities in these vehicles, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. Click the link below in the description. We'd love to give you a free strategy session and see how we can help you fix your credit. And I'll catch you guys in the next video.